The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Now, Larry Pesavento.
Okay, good afternoon, folks. We're going to have Rich Anderson on the show on Thursday for the Commodity Hour because we have a big crop report due right after the show. It comes on, I believe, well, actually it comes in to 10 o'clock. No, it'll already be out, so we'll have a pretty good idea of what's happening. They've changed the rules on trading after a crop report, and it's really not conducive to trading. I'll let Rich describe it, because they basically made all stop orders stop limits. In other words, they've got to be filled within a limit of where the stop is, which is just totally wrong. But they don't ask questions when they make the rules. But Rich will go through this and give you some ideas. It's only during the time after a crop report, and I don't understand why they did it, but he'll go through this on Thursday with us. I started the show today. Oh, first of all, make sure that you do your trading. If you're in the trading contest, make sure you get your trades in every day, because they're daily prizes, and it's good. It's good competition. Adds a little pressure to you, which is always a lot of fun. So it's really fun to do a trading contest. They had these years ago, and we haven't had them around for a while, so this is really interesting to see this one. Then the prizes are really substantial, so make sure you get your trades in, and do the best you can, and you should be in the bucks pretty quick, I think. I wanted to mention that something happened recently, last few days. Poland basically took the money away from people that had invested there in their bonds and in some of their stock stuff, and they put it into their own government bond fund. In other words, they basically confiscated it. People cannot take it out now. They hit some people really hard, like PIMCO and some other folks that have their money there. The reason why they did that is that it increases the value of their assets in their under their government control. And that means they can raise more debt, because the debt-to-asset ratio has now increased. So they steal the money, and then they can borrow more. It's a wonderful life. This is pretty much what happened in Cyprus. And I don't know how many more countries are going to go through it, but it's not a good situation. Back in the old days, something like this would have had gold up $100 an ounce, but these are interesting times we live in, so it's not the same. I started the show today by posting a chart in the room for the Tiger Den on the DBC for commodities, and I wanted to show the relationship between the DBC for commodities and then also the relationship with the New York Stock Exchange Index. That's the one that's in red there. And as you can see, the correlation of the times that it goes up and down is very, very well differentiated, with the exception of January of 2013. That's when the correlation really stopped, and we've been in bear market in particular in commodities since April of 2011, and we just completed a Gartley pattern up here just about 5 or 6 days ago. So we'll see if this is going to keep it going to the downside. But this correlation that had been working for years and years is no longer working. That's the $64 question that I've always had, is that why isn't copper and some of these other things really working to make yourself make it better to be. I'm trying to get my words together here, folks. I'm trying to get. In other words, the correlation should be very, very strong, because if they're making products, they should be using commodities, and this is not what this chart or the copper chart or most of these others are telling us. So that's something that's bothered me for quite some time. Not many people, pay any attention to it, but we'll have to, wait and see. Now, the next chart that I wanted to post was the Dow Jones Industrial Average. We're having a nice little rally today. We've come off that 786 retracement that we made back there about 7 days ago. We're having a nice little rally, up into this level that is, pretty strong. So we'll see if this is going to be the case. We're in a bear market as near as I can tell. I don't think anything is different. The problem is that we have some real strength in the Nasdaq and the Russell. Those are the ones that have held up incredibly well, and that's the main thing that you have to keep in mind, because the Russell just barely backed off to the 50% level, and the Nasdaq could only go down to not even the 38% retracement of the previous low, which is incredibly bullish. Now, I'm sure that's due to Apple and a whole bunch of other things, but that's why the market is so very strong at this point. That doesn't mean it can't change at any particular time, but that's what we're looking at when we're watching these things. I wanted to bring up the VIX index because we always take a look at that. And the VIX index is showing us that we hit the 61% retracement last week, and we're in the midst of a correction, which is normal, and because the market was a little bit overbought when we got up there around the 18 level in the VIX index, but now we're coming down. There's no fear in the market, and I guess there shouldn't be. Things like Poland, that doesn't even cause a ripple. There was hardly anything in the news about it. I received it from one of my friends. It's a hedge fund manager, and he had got it off of a financial site that reported it. So whether that means anything in the long run or not, I'm not absolutely sure. All I can say is that usually that is not a good thing when countries, confiscate, the money. If you remember the quote by Thomas Jefferson, he said, "Any government that can give you anything is that same government that can take everything away from you." So we've got to remember that is that can happen in government. Now, the Nasdaq chart, I wanted to bring this up because it's, I think, an incredibly important chart because the fact that we did not make a 38% retracement off of the low from July. We made, 61% retracements in the S&P 500, and we made a 786 retracement in the Dow Jones Industrial Average, and we made a 61% retracement in the New York Stock Exchange Index, but not the Nasdaq. The Nasdaq was very, very strong, and it has continued, to move up into that zone, more and more each day. As a matter of fact, it's approaching new highs. In fact, as of today, I think it might already be in new highs, given the fact that we're up about 30-some points. So I'm sure that it is in new high ground. So what I use is the New York Stock Exchange Index. That's the one that's the most broadest. It's it's the fairest of all, and it still tells me we're in a bear market. But when you see stuff like this in the Nasdaq, it makes you wonder. This happened in 1999 and 2000. The Nasdaq just kept on running, whereas the Dow and the New York Stock Exchange Index just held their ground during January through March of 2000, and then on the 24th of March, that's when the market, turned down to see the big bear market that started on March the 24th. One other comment about the trading contest. Those of you that when you do this, you have two reasons for doing it. One is to try to win the prize, and the second reason is to to prove to other people that you're able to trade, and that's always a good thing to do. That that you can show that you can trade under extreme pressure, and in a trading contest, it is extreme pressure because you're under the gun every day, trying to do the same thing. It's not the difference between that and live trading. Is live trading you're trying to feed your family. The other one you're trying to make to win a contest, which is going to be a little bit of a challenge. I've mentioned this before, but years ago I used to go into these trading contests, and unfortunately I was always up against Frank Tauscher of the Super Traders Almanac. And Frank won all the time. I mean, he's probably he's the best trader that I've ever met. And but he was really spectacular. And he unfortunately died a few years ago at the age of 59 of a heart attack. So anyway, he was in great health too. That's the most amazing thing. And he jogged and didn't smoke. And who knows when God takes you? When it's supposed to be the time. Now, I wanted to bring in the E-mini S&P because we're up against the 61% retracement right now. As a matter of fact, I think we just went above it by just a little bit. As a matter of fact, yes, we did. We're almost up to the 786 retracement on this last move. But as you can see, the cycles that we're in here were pretty strong, and these are some of the lunar cycles that we were looking at. new moons to full moons and things like that. And we are approaching the 61% retracement up here at the 1674 level in the E-mini S&P. So we'll see if it's going to reach that today. The NASDAQ is already into new high ground, as I know, and as I see it trading right now. So that tells us that we are most probably going to be moving a lot higher without too much trouble. That would be my thing. And we've got one market that we will cover after the break, but I wanted to also bring up the Dow Jones transportation here, because we have the same type of a pattern with a 3 drive to a top pattern. We had the 61% retracement pull back, and now we're also in the midst of this same rally that we're going through, right now as we speak. So we'll keep a close eye, on that particular one. Now, I would like to mention one other thing before we get to the break. Our family is in real need of prayers today, folks. Our little grandson, who's 1 month old, is fighting for his life in the hospital. And in Philadelphia, he's under good care, but he's in a real battle. He has spinal meningitis, and we don't know how it happened, but he's not doing well. And so any help prayers that you folks can send out would certainly be appreciated. And it's not a fun time. Believe me, you you go through your life, and boy, I tell you, and nothing is worse. If you're a parent, you know that nothing is worse than having a child that is ill, especially a little infant like this one, who's just totally precious, and is really having a rough time. And believe me, his grandmother's not handling it too easy, and neither am I. But you have to go through it, and I'm sure we'll work out for the best. I want to switch over. We're coming up to the break here, but we need to talk about the bond market here because we're going to take the break. When we come back, we'll talk about the bond market.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I have to share one other story with you, considering all the things that have been happening. Saturday, I was up visiting Mark and Paula Douglas up in Scottsdale, and I play in a poker tournament on the first Saturday of the month, and I was getting ready to go. I was stopped at a stoplight. There was a policeman behind me, and when the light turned green, I moved slowly, to go across the street, and just as I did, a runner running through a red light hit my car and flipped over the hood, hit my windshield, and landed about 20 feet on the other side of the street. And, of course, I stopped my car, and I was shaking so bad. The policeman got out. We went over to see how she was doing, and the policeman told me to go get my license and get my registration and not to go anywhere. And I said, don't worry. I said, I'm shaking so bad I couldn't go anywhere. And so he came over to visit, to get the information from me. And as he was doing that, the runner gets up and she takes off. She was about 30 years old, and she just starts running down the street as fast as she can. And I asked the policeman, I said, what's going on? And he just looked down the street and he said, she's either running from a crime or she's an illegal alien, so let's don't worry about it. He said, get in your car and go home and forget about it. I'm not even going to report it. And I swear, I drove around the corner off to a side street, and I sat there and I stopped shaking for about 30 minutes. So these last few days have been a little tough. But let's get back to the markets. Okay, we've got a potential bottom in short-term bottom. Repeat, short-term bottom in Treasury bonds. I posted the 30-year Treasury bond in the Tiger TV here. We made a beautiful 61% pullback yesterday at the 129 level. We've had a pretty good rally, but it's very, 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 very meager. And I'm looking for a rally of at least 4 or 5 points in Treasury bonds, maybe over the next few days. And if we get that, then we would be able to get in and short them, because they're going lower. Interest rates are going higher, folks. It's very apparent. If you look at the charts, there's a tiny bit of support down here, but it's very, very tiny. They're very, very oversold, which means you could get a pretty good rally, much like we're having in the euro. The euro was very, very oversold. And we really don't expect it to go much higher, maybe a little bit higher than where we are now. I'm going to post into the room the Treasury notes on a daily basis, because we had that monster head and shoulders pattern that formed way back in 2012 and then finished up in April, and we've been straight down since that time, and we've broken all support, but we are very, very oversold. And even when you break support like this, you can have a really good snapback rally, and so there's a possibility of that, just because of the fact that you're down 5 months without any rally at all. That makes a very, very oversold condition, and when we do get that, you should get ready to find a place to find an ABCD pattern in the notes and the bonds, and we should get one. But the question is when we're going to get it, and maybe this is one of those times that we don't. Remember, this is a 32-year bull market that's been going on that is over. Basil talked about it on his show, that 3 decades of lower interest rates is rapidly coming to an end. And so that's what we want to, keep in mind of, what's going on in the interest rate markets. We've been very bearish for this for a very long period of time, and it's getting more and more bearish. And it should be apparent to a lot of people now, because you've got the 30-year rate on Treasury or on mortgages way above 4% now, and interest rates on other things are increasing, dramatically. Also, now we would like to go over and talk about the gold market here, because we've this is something that happened last night. If you remember Friday, we were talking about it was Thursday, we were talking about that support in the gold at the 1350 level, and after the unemployment report came out, the market rallied up almost exactly to the 60. Well, it did. It went to exactly the 61% retracement up at the 1395 level, and now it appears that we might be heading down into this 1336 level, which would be an ideal situation to look at gold from the long side. I am still of the opinion that we have made a major bottom in gold at that $1,170 per ounce level, and I believe that if we can hold this level around 1330, we got a chance for another move to the upside. 877-927-6648, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I'm going to take a look at the copper market now because we've just completed another Gartley sell pattern last evening on the Sunday night show. If you'll bear with me here 1 second. We got up to the $3.30 per pound level in the. Let me see if. I made a mistake. Sorry. I forgot to put the timed camera on. There, I think should be working okay. We've got the copper up now. It's a 60-minute chart, and it shows the ABCD patterns that have been happening, with it. And we just completed another one. This is our fourth lower high since the end of August, and so this market is still in a very bearish mode. We've had lower highs and lower lows all along, and so this is a rallying area into this area right here. Now, should we get above the $3.32 per pound level, this would change dramatically, and that would tell us that we're getting ready, to go, much higher. So we'll have to, let history tell us whether we're going to get there or not. But right now, it's completed another Gartley, and it's backed off a few cents from that level, but it's still, rather early. To take a look at these particular things. Now, the one that I wanted to spend some time with in earnest here is the euro, because the euro is we're having a very strong rally in the euro today, It's got up to the the 132 area, I believe 132.80 area, which is it's been down for 10 days. We talked about this on Thursday, the fact that we've had this 1, 2, 3, 4, 5 reverse point wave, which is an incredibly bearish pattern, and then the market was down 10 days from that level. And now we're having a little bit of a rally. Well, it's not a little bit of a rally. It's 100 and some pips. And that came exactly off of the 50% low that we made last week. And so we would expect this rally to somewhere around the 133 to 133.50 level, which would be the 61% retracement, would be an area where you would expect the market to have a really strong resistance. We've had lower highs in the euro for at least several years. And we've been in a very strong consolidation now between the 121 level and the 136 level. And we are testing this right now. But this 5-wave reverse point wave pattern that we had that completed in late August has been very, very strong. We came down 10 days very, very hard, and now we're in our second day of a strong rally. Whether that's going to continue or not, we'll have to wait and see. The same thing has happened with the British pound, except that the British pound is much stronger. It has had a situation where the market has gone up in the area of in fact, it's reached the old high that we made back in August. We have touched that again at the 157.20 level, and we went above that by just a little bit. And we will see if this is going to be the the top of the British pound market. The U.S. dollar index has gone below the 82 level, which is not surprising because that completes that 5-point reverse wave to the downside in the the U.S. dollar index. But if we get much below 81.50 in the U.S. dollar index, look out, because it could really start to come in areas of collapse. Someone asked me a question about the Syrian situation. Well, frankly, I don't follow politics or the fundamentals of things on Sunday because I was a little out of the weather, trying to do some praying and thinking about my grandson in Philadelphia, with the rest of the family. And I happened to be watching Face the Nation, and I listened to these really smart generals talking, and they may all make a good case. Some people say we shouldn't do anything, other people say we should. Frankly, if you want to know my personal opinion, is that I'm tired of the United States being the policeman to the world. I know we've got to do certain things, but there's certain things that we have to have more common sense with, and I'm not so sure that somebody might have planted these chemical weapons to make the president of Assad, Syria, look bad, so there'd be another civil war. Whether that's true or not, I don't know. He was supposedly on Charlie Rose and said that's what happened, but I don't believe any of those guys. But we'll see what happens. What is surprising is the fact that the price of gold never went anywhere. It's been more to the downside than to the upside. And also with the price of, the crude oil. The crude oil went up to a beautiful 786 retracement last night. It hit it exactly at that 110.60 per ounce, and is per ounce. It might be per ounce someday, but $110 per barrel. It was the exact 786, and it has sold off a little more than $1 a barrel so far today. So that's what we're watching to see if it's going to be the case. I've opened a quagmire about this thing with Syria. All I can remember is that we had all these weapons of mass destruction that were in Iraq, and we never found those either. So, where did they go? Whether they were there or not, I don't know. All I know is there's a lot of sinister things that happen in government, and unfortunately, we have to live with it, and that's nothing else that we can do. Now, one of the trades that we did last Thursday that worked out extremely well was the U.S. dollar versus the Japanese yen. We had a beautiful Gartley pattern forming up there at that 100 and change level, and the market, promptly dropped $2,000 into Friday after the non-farm payrolls report, and then on Sunday night with the fact that the Japanese will now have the 2020 Olympics. The market was very strong because that's supposed to bring a lot of money, into Japan. So the last time they had the Olympics was in 1964, and I happen to know someone who won a gold medal in the 100-yard dash, and he's since passed away. But at that time, he was the fastest human. And he was from California. Actually, he was an old friend of the family. But whether the Olympics mean anything to the Japanese stock market, I know that it gapped up, very, very strongly, and then it backed off a little bit. But the yen versus the dollar is still in a bearish mode. It's had three lower tops, regardless of what the Olympics is going to do. If we can trade above 100.50 in the yen versus the dollar, that would certainly tell us that, we are heading to the downside. The dollar is going to weaken to the yen, and this thing will probably get up to the old high that we had up at the 103 level. Remember, this thing was at 75 when Tom O'Brien, started talking about King Dollar. So it went from 75 to 103 and has backed off a few times. But, right now we could be forming a pretty significant top at this particular level. A question has arose about the price of silver versus the price of gold. Silver had a very strong. I pointed this out in last week's newsletter. Had very strong resistance at that $25 per ounce level. That was the 786 off of the previous highs that we'd made. It's still in a downtrend. It's backed off a little over $1.25. From that level, but it still, has more to go to the downside, in my opinion, and then would be able to, take a spot to look at it. But we need to get the gold down to around the 1335 level, and then I think we'd have a really good chance of a good spot to take a look at the long side of gold. That's my opinion of what I'm trying to see, with the gold market. I wanted to cover the Canadian dollar because we've had a really big move in the Canadian dollar after we made the 786 retracement a week ago, and the market dropped, well over $2,000 a contract in the Forex. It's holding right at the 61% retracement now, so that if the market gets a little bit of a bounce here in the dollar versus the Canadian dollar, you might be able to, get a short position on. I know most of you realize that I trade Forex very, very extensively. Probably 70% of all the business that I do is in the Forex markets because they're so easy to trade with their 24/7. They have fantastic liquidity and the stop protections and all the other things that you get. Is just really, it's really quite amazing that you're able to, do all of this, and it goes on forever. It's just 24/7, 5.5 days a week. So it's really quite fun, to trade this. Now I've only got about 15 minutes, but we've got the commodity show coming in on Thursday, but we've got some things happening in the commodity markets right now that I think are very, very important, and I wanted to bring them up now because by the time we get to Thursday, it might be too late. And the first one that I wanted to talk to you about, and this is one of our, one of the big crops in our country, just followed behind corn, is the soybean market. And if you'll take a look, this is November soybeans, and it's basically made a double top. We've hit this number of $14.05 per bushel several times. And, right now we have backed off, about 25 cents actually 35 cents from that high. But we have this monster report coming in on Thursday. That's why we're going to have Rich Anderson on the program, to go through this, because this has the potential of a major top in the soybean market. And if you look at wheat, if you look at wheat and if you look at corn, you'll see that, these markets haven't hardly rallied at all. And so that's another reason is I know that each crop is a little different, but there's a strong probability that we've made some type of a double top here in the soybeans. But we will know more about that, after the report comes out. And even after the report comes out, it's going to be tradable. You might have to wait a half a day until the normalcy of the market comes in. But soybeans follows the numbers of the Fibonacci sequence incredibly well. It follows the patterns, very, very well. So all of those things are very, very important as far as telling you that this is where you want to be looking at the potential for a double top in soybeans. Because if this happens, the market rallied $20,000 a contract from August. Beginning of August till the end of August. In 1 month, it moved $20,000. I mean, do you know how long it takes the S&P to make that kind of a move? I mean, so these are tremendous moves, and if you happen to, be on the right side of one by, using good risk-reward management and finding some patterns, these can be very, 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 very profitable. And they also they lean themselves towards the option market too. You could buy a put. And that would be something that would be, helpful sometimes if you want to control your risk. Now, I wanted to cover one other, and that is oops, I hit the soybean market again. Just a second here. I want to go to the wheat market because that's another one that is right near the spot where we are at a very, very important bottom. We're coming into this major crop report that's going to be basically for corn and for beans, so wheat will be affected a little bit, but wheat at the $6.22 per bushel level is going to be very, very interesting to see if it's going to hold this level, and we will find out if in fact that will be the spot that will give the probability of the market having a good rally. We were originally, if you remember, in June and early July, it looked like we had a very strong rally in corn and in beans, but they were short-lived because the weather did not come about like it did the previous year. The trade was very profitable. Unfortunately, it didn't go as far as we had hoped that it would go, but the pattern worked for a very substantial amount of time, and then has failed. And believe me, there are people out there, and they could be right, that we could be looking at a major bear market in wheat, corn, and beans, because these markets have been going up for 4 years, and it's going to be real interesting what happens with this report that comes out at 10 o'clock in the morning on Thursday, the 12th. So we'll see if that is going to have a big impact. But we will have Rich Anderson from Anderson Capital Management on the show at that time, and we will see what we're looking at this particular time. Now, I wanted to bring up one market in real time. Well, we got to take a little break here. We come back. I want to bring up the corn market.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and to discuss trading strategy. For all the information and to take part in the Tiger's Den open house, log on to TFNN.com today.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, we're back, folks, and I've posted into Tiger TV the corn market. That's December corn. That's new crop corn. And basically, you know, we've had these beautiful ABCD patterns. In fact, the big one that started back on August the 13th and ended on August the 26th. A nice 2-week rally was a perfect AB equals CD pattern. The market topped at $5 a bushel and has since dropped, well over $2,000 contract down into the $460 per bushel, where the 786 retracement has formed. If you have a chance, you'll take a look at the places where corn finds support. I mean, this is our largest crop in the United States, by the way, and it's worldwide. So, people follow it quite a bit. You'll notice how it hits these numbers, the ABCD patterns and the 618 retracements and the 786 retracements. It's really quite amazing. So it's a good trading tool. To be able to to follow these. Unfortunately, on days like we're going to have on the 12th, when we have a crop report day, it's going to be quite crazy. Rich will be on. The crop report comes out at 10 o'clock in the morning in Chicago time. So by the time we have our show on, all of this will be out, and we'll see the wild movement, and Rich will be able to explain to you how they've changed the order filling for electronic trading at the Board of Trade, because they've changed it, and it's not in the best interest of the trader, in my opinion. I'll let him explain it to you, because he explained it to me, and it was not simple, but it's based on limits and stop limits, and a stop limit order to me is the worst order there is in all of commodities or stocks, because a stop limit means if you have a stop in there, it has to be filled exactly at that price. Well, if the market gaps beyond that limit and you want to be out of the trade, you're not out of the trade because your limit was not filled. And so you're basically, you're out of luck. Whereas if you have a stop order in, as soon as that order hits, it becomes a market order. And that's the way that it should be, because you want to be out of the market when it hits that price. You don't want to have a limit and worry about nickel and diming it, for a few pennies, and then try to find out whether you've, you can save a few dollars and lose several $1,000s. That's not any way to do a trade. So Rich will go through that with us and give us an idea of what's happening. On the other side of the coin, I've heard from other folks that the money from MF Global, most people got back between 80 cents on the dollar and 90 cents on the dollar, which still leaves $110 million floating around out there somewhere. And of course, Corzine will not ever see a courtroom, probably, nor will he ever see a prison for doing what he did. But if someone goes into a 7-Eleven and steals a candy bar, he gets 17 years in prison. So that's just the way things work, and that's nothing else we can do about it. I will get off my soapbox because it's certainly not a day to be on the soapbox. We have some really strong support here in the corn at the 459 level, but frankly, it doesn't look like it wants to hold. It didn't rally very much at all. Soybeans had a really strong rally last night, and then rolled over to get down on the day. But this report that's coming out is going to be a really monster report that will probably affect us all through the growing season. The good part is that it's going to give us some great opportunities to do it. Now, the one thing we want to focus on for Wednesday is we want to find a place to get short the euro. That's the one we want to look at. Live every day in an attitude of gratitude, and may God bless each and every one of you.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.